Brian Sozzi from Wall Street Strategies. He recently authored a report entitled, or where he talked about, I should say, the consumer spending roller coaster. And really, you and I were just talking over at the Starbucks cafe here on the floor, and you were saying it's not necessarily really a good sign for consumers because there's a lot of factors that play into this, like inflation.
One big thing is absolutely inflation, Matt. So if you strip down the sales numbers, there are signs that the consumer is pulling back. Look, for example, at Zumiez. Their units per transaction were actually down in the month, but their average unit retail price were up.
Zumiez is what, a shoe?
They sell teen apparel. So the consumer has pulled back a little bit. And if you look at some of the results on the low end, you have a Fred's, a totally obscure name within the discount retail sector, but they actually warned on the second quarter because their low-income consumer is pressured, which ties into what happened with Family Dollar last week.
You said that Nordstrom was one of the winners. Obviously, it's a higher-end retailer. They've been beefing up their catalog sales. They've been beefing up their image lately. What are they doing right that others are not doing right?
I think it's their footwear department. They're offering great customer service. When I go into a Saks, I don't think it resembles Nordstrom in any way. Sure, the products might be similar, but I think you get better customer service at Nordstrom, and the consumer is willing to pay a little more to get that customer service and a better product.
Hey, Brian, I want to pull back for a moment. We're just talking with Hitha. I mean, these were blow-away numbers, but should we be very, very careful? Because you're right. I love what you write in your note. You said there continues to be more mixed reads on the state of the U.S. consumer than there are alcohols in a Long Island iced tea. So, I mean, the consumer can change on a dime here. So do we need to be careful about what we're seeing in these numbers, or do you think it's the beginning of a longer trend potentially?
I think you need to be mindful and very careful here. What we've seen over the latter half of 2010 and as we come into this year, significant volatility within retails. I'm actually characterizing the boom and bust periods. The consumer is showing a willingness to spend around when the promotions are right, when it's a specific time in the month, or even when the weather's right. But they've pulled back when those things aren't going in their favor. So as we look into back to school season, I think it's important to watch sales in the first couple weeks of the month because you'll be able to gauge the receptiveness to some of the higher prices.
Brian, it's Hitha over here. So good to see you. I wanted to talk about the zombie consumer that you talked about in one of your earlier notes. How does that have to do with the low and high spending that these consumers are engaging in right now?
Well, the zombie consumer thing, well, actually, good to see you too, Hitha, as well. But the zombie consumer thesis is where the consumer's just going to work, basically, so they can pay for their needs. You're not seeing much wants being purchased. And you certainly see within the Family Dollar results, for example, last week, where they actually noted sales down in discretionary departments. So for a dollar store to say they're saying sales weakness in the discretionary departments, I think is quite telling what's happening at the households earning less than $60,000 annually.
You know, there was a lot of talk today about the drop in gas prices, still fairly expensive for what Americans are used to. And you saw the administration helping to release 60 million barrels of oil. A lot of people are saying that is a shot at the consumer, a little bit of extra stimulus. Do you think it's working? Do you think we could see more of the effects of that?
Well, whatever they do on the strategic petroleum, oil prices have climbed back up. So gas prices, I think, are down about 10% from the peak early in the year. It has not yet translated into retail sales. I think consumers are much more concerned, yes, with gas, but also with food prices, which, while leveling off, is still at much higher levels than they were last year.
Brian, talk to us a little bit about the teen retailers and what are we going to expect for back to school? I know that's right around the corner.
Again, so I think doom and gloom, it continues to be priced within many of these teen retailers. And I think there is a reason to be cautious on teen retail. You're having heads of households, specifically moms, paring down their budgets. I'm starting to see it within some of these Missy or women's apparel retailers. So in order to have success in teen retail, what I think you need is to be selling differentiated product. And it's not meaning just selling something different that sits on the floor idle. You need to actually you actually need to focus in what the teen is actually buying. I think Wet Seal is a great name. It gives the consumer exposure to the low end, and they're selling products that the teen actually demands at this point.
Brian, I got to ask you about Target. I'm a fan of the store. You write, though, about some potential problems at Target, yet they gave good numbers today, and the stock's up about 6%. Do you want to kind of change or rethink your strategy here about Target?
I think Target, we need to be mindful there, too, as well. While they've beat sales expectations for this month, they've been disappointing the street. And what you're seeing from Target is they're putting in a lot more grocery aisles within their stores. That's great, but it's also changing their gross margin composition. I also think they're losing share within the hard lines and soft lines departments from better positioned retailers. For example, Bed Bath & Beyond continues to print strong sales and earnings growth, but Target is struggling in these categories.
Hey, Brian, thanks for joining us. Brian Sozzi there from Wall Street Strategies.